Welcome to the podcast, where we break down the complex financial and economic shifts that shape your world. I'm your host, Davidson, and in today's deep dive, we're covering one of the most consequential changes ever proposed for the American housing market, the 50-year mortgage. Yes, you heard that right, 50 years, 5 decades, half a century. I'm going to show you why this idea is suddenly being aggressively pushed by the government, who actually benefits from such a radical change, and why this policy could, in my professional opinion, trap an entire generation in permanent debt. But before we look ahead, we need to understand our history. We need to go back and understand how the current standard, the 30-year mortgage, came to be. Please remain with us. We will return following this musical interlude. How the 30-year mortgage saved the day. I want to give you a quick recap of the American 30-year mortgage, which has been the most common type for decades. Before the 1930s, mortgages in America were, I would argue, brutal. I mean, you can judge for yourself. Here's what the typical mortgage looked like. You would get a 3 to 10-year term loan, and they would be interest-only payments. But at the end of that short term, you would face a massive balloon payment. That simply means for 10 years, you paid the bank nothing but interest. Then, when the loan matured, you had to pay back the entire amount you borrowed the principal in one fell swoop. So, what do you think happened when the Great Depression hit? Millions of Americans lost their homes overnight. The entire housing market collapsed. The U.S. government had to intervene. In 1934, they created Fannie Mae. Their goals were simple: make mortgages cheaper and safer, encourage banks to lend again, stabilize the housing markets, and finally, standardize a mortgage where your monthly payment actually reduces the principal over time, an amortizing loan. By the 1950s and 1960s, the 30-year mortgage became the standard. It exists today because the government created it to stop mass foreclosures and to make homeownership possible and secure. And now, the government is considering changing it again. The proposal, a 50-year, is a game changer. Let's talk about what is being proposed today. The Federal Housing Finance Agency, under Director Bill Pulte, is working on a proposal to extend the standard mortgage from 30 years to a staggering 50 years. Pulte even said, and I quote, "We are indeed working on the 50-year mortgage, a complete game changer." President Trump supports the idea, and the pitch is very simple, very seductive. It will lower monthly payments and make housing feel more affordable. But I have to tell you, that's just a pitch. When they say lower monthly payments, it does not tell the full story, not even close. Now, I'm going to tell you the part that nobody's putting in the headlines, the hidden costs and the drawbacks. You could judge for yourself whether this is a good idea. Number one, you will pay much more interest for the exact same house. You are paying more than double the cost of borrowing money. Number two, you will barely build equity. Your slow pace of paying down the principal means you are barely building wealth. If we compare the two loans after 30 years of payments, that initial loan, meanwhile, the 30-year borrower is completely paid off, debt-free and building security and wealth. That is a massive difference in net worth and financial freedom. I want you to think about this. With a 50-year mortgage, if you buy at 30, you're still paying at 80. Your mortgage payoff date could be the year 2075. You might be blowing out your 80th birthday candles and paying off your mortgage at the same time. Number three, it doesn't fix prices. It inflates them, and this one is critical. A 50-year mortgage does not fix home affordability. It actually makes home prices go up. Why? If you have lower monthly payments, it means more people and a larger pool of buyers are going to qualify for a loan. What does that mean in a low inventory market? A cheaper payment does not make housing more affordable. It makes the price tags go up. This could instantly bring back the vicious bidding wars we saw a few years ago. Who really benefits? If you read past the headlines, from my perspective, I see this as a gift to the real estate industry, not the buyer. You have to ask yourself, who is really benefiting from a 50-year mortgage? Realtors and brokers, they will receive higher commissions because home prices will rise. The builders, they will sell more homes because more people can afford the monthly payment. The banks, they will be making significantly more in interest income, more than double at the expense of the borrower. Investors, there will be more demand for mortgage-backed securities, benefiting Wall Street. Who does not benefit? The home buyer. This keeps the housing machine running, but it's at your expense. This is essentially turning homeowners into permanent renters renting from the bank. If you buy a home with a 50-year mortgage, You're not really buying a home, you're buying a monthly payment. This isn't true home ownership. This is a lifetime rental agreement where your landlord is the bank. What's happening here is part of a much bigger trend. A good question is, why do people fall for this? I would say that this works because humans think in monthly payments, not in decades. That is the truth of the short-term mindset. People don't calculate, how much will I pay over 50 years? No, they calculate, can I afford? Banks know this. Politicians know this. The consumer often does not due to a lack of financial education. The 50-year mortgage is not a solution. The real problem is that we don't build enough homes, zoning laws block construction, and construction costs are surging. Stretching a mortgage does not fix the housing market, it simply hides the problem. It's financial duct tape. A 50-year mortgage may sound like a solution on the surface, but the reality is the opposite. The benefit is slightly lower payments, but at what cost? Higher interest, a slower equity buildup, and debt that follows you into old age. This does not improve home supply, and it creates a system that keeps people paying forever. My opinion remains, this is not a path to home ownership. This is a path to permanent debt. The real question is not, how do I get the lowest monthly payment? The better question is, do I want to own my home, or do I want to rent from the bank for the rest of my life? A 50-year mortgage doesn't solve affordability, it just stretches out the debt. I hope this discussion has been educational. We will keep you updated on this whole situation as it is still just a proposal. We'll see what happens next. Thank you so much for tuning in. Please subscribe or follow the podcast so you never miss a breakdown of the policies that impact your financial future. I wish you a very nice day. Take care.